Good morning. This is Paul Georgie from Allendale. It's December 6th, 2011, Tuesday morning, and we've got more downward pressure in the grain markets here overnight. We were down, took out some major support areas that had held here for several months, and the reasons that we can find that we were able to press the market is started yesterday afternoon when the S&P ratings firm downgraded or threatened to downgrade the European nations and that were in the AAA rated area. So that is has got trade very concerned. It also puts more pressure on the European leaders this weekend to come up with some kind of plan that they will all agree on and have an immediate effect on the economic situation in the Eurozone. And with that news, we caused pressure in markets, stock markets around the world overnight. Up until just a few minutes ago, the dollar had been trading lower. We are trading higher now. Crude oil is lower, and the U.S. stock market, which was showing some strength here most of the night, has just turned negative on the Dow index. So that's going to weigh on trader attitude, and I think confidence of traders willing to take on risk, especially in the agricultural markets, has certainly got a reason to put some pressure in the grain markets here this morning. Other news that we see here is just the lack of demand. We need to see some demand come in here, even if it's an announcement of several loads of corn or soybeans. We need to see some demand coming back into the U.S. markets, which we haven't seen for some time. And just that announcement coming out here at 8 o'clock would be enough to provide some support, I believe. But without that, continued weight on the market, and we've got the USDA's monthly supply demand numbers. We don't expect any adjustments in production. However, they could make some adjustments in the demand side and ultimately change the ending stocks. Our estimates, we believe that we could see as much as 899 million bushel carryover in corn. That'd be an increase of about 50 million bushel from last month. An increase in soybeans with the rate of soybean demand that we've seen here in the last several months, without China coming in and buying from the U.S., we could see an increase there of as much as 35 million bushel of soybeans in the ending stocks number, which would take them up all the way up to 230 million carryover. So that would be certainly a negative impact on the market if the USD adjusted that. Wheat number also expected to see an increase. The weather situation in South America looks good. We've had some areas in Brazil that have been dry. It looks like 85 to 90% of that region and the growing region there will get some moisture this week. And then in a long-term forecast still puts more moisture for that area as well. Argentina, maybe a few dry areas, but as World Weather Inc. says, not to be concerned about crop damage at this point in time. So the key to the grain markets here today, we're looking at what the outside markets are doing. Headlines certainly are going to be an impact, and as we move into the weekend, there's going to be some adjustments, some liquidation. And I think also today we could be looking at the technical aspect of the market as we've taken out some key support. So we've got to monitor that closely. Today's close will also be critical to further ideas of where this market might move. In the livestock complex, we've seen huge sell-off there yesterday. Cattle down the limit, which really is a head scratcher as the cash markets continue to hold this 124 level. We may be a little lower this week, especially with the pressure that we've seen in the futures contracts with as much as a $5 difference between these cattle and these futures. Don't expect any deliveries when we have that type of disparity. but it also gives us an indication that this cash market could find some pressure. The trade under pressure because of the snowstorm that was forecasted was not quite as severe as what the trade was expecting, so that put a little pressure on it. And I think liquidation coming out of the attitude out of Europe, investors just taking money out of the livestock and grain futures and putting them in crude oil and in the U.S. stock market. Hog trade, we've got cheaper corn there, creates an attitude that we're going to have more pork. Concerns over slowdown in the Chinese economy has also got traders believing that China will not be in buying any more pork, that they're going to slow down on their purchases. Therefore, we'll have plentiful supply, and we're getting some pressure there as well. The overall livestock and agricultural market certainly being affected here today by the attitude of investors, the risk-off type attitude, and we'll have to see where we close here today, because I think the close in many of these markets will be extremely important in giving us a direction on where we go from here. So stay tuned with Allendale Research, and we'll keep you informed. Also, remind everybody that tomorrow I'll be in Albert Lea, Minnesota. If you're in the area, please stop in and see us. Check out all the details on the web and right on our homepage, or just give us a call and we'll get you registered for that event. We wish you a very successful trading day, and I'll talk to you tomorrow morning. Thank you.